What's up, you guys? It's Paul from the 95 Investors Club channel here. In this video, I'm going to explain to you my exact strategy on how I'm planning to go from $0 to $1 million in the stock market, okay? Now, before I get into that, I want to make this disclaimer perfectly clear. I am not a financial advisor, so the reason I make these videos are strictly for educational purposes only, and I'm giving you these examples and strategies based on my own experience and that which have been working for me, okay? This is not going to be a get-rich-quick method of investing at all. So anyone who tries to promise you that you can make $1 million in the next 3 to 6 months, run away from there, because that is not realistic at all, okay? Now, I also want to let you know that I don't already have $1 million invested, but this is my strategy for the next 10 to 15 years, which is a relatively more realistic timeline to be able to build a portfolio of $1 million, okay? Now, before I get into the actual strategy, let's actually get into what it really takes to build $1 million, okay? So I have this compound interest calculator from investor.gov. I already did this calculation to get an idea of it. So let's say you are starting from $0. There's a good chance you already have some money invested in it, but just for the sake of this video, if you start with $0 and you have the ability to invest $1,000 a month, this could be a combination of your Roth IRA, your 401k, with your company's contribution, as well as any taxable investments in a Robinhood or Charles Schwab or whatever it is. So if you can invest $1,000 a month over the next 16 years, if you can maintain about 20% per year, which I know sounds crazy, but bear with me here. If you can maintain 20% a year, it'll take you exactly 16 years to have $1 million in the stock market, okay? The interest rate variance range here of 5, what that shows you is how long it's going to take you if you're maintaining 20% per year versus 15% or 25% here, okay? So if I highlight this here, you can see here that at 20% is when you'll get $1 million in 16 years. But if you're maintaining 15% a year, it's more like 668K. But if it's 25%, it's 1.6 million, okay? So just a 5% difference can make a massive difference in how fast you can get to that coveted $1 million in the market, okay? Now, I know the 20% a year sounds extremely unrealistic, guys. I mean, that's the track record that Warren Buffett had. His track record was that he maintained 20% per year for 54 years, which is exactly how he made billions and billions of dollars. So if 20% a year seems really unrealistic to you, please stick around, because I'm going to explain to you how that is possible, okay? Now, also another point to note is 20% a year doesn't mean you're actually making 20% every single year. One year could be an amazing year where you made 60 to 80%. Another year you could have lost 10% because of a recession or a bear market, and another year at 30%. Some years you're at just 5%. But the average over the 16 years could potentially be 20%, okay? And that's really all you need to be able to get to that 1 million point starting from zero for the next 15 to 16 years, okay? So the first step is going to be picking the right stocks, okay? So the first step to picking the right stocks is to only invest in companies that you know, like, and understand, okay? There are a lot of people who are investing in random penny stocks or companies that they just heard from someone and they don't know anything about that company. They've never heard of it, or nor do they even know what the company is about, okay? So if you don't know, like, and understand that particular company, I recommend not investing in it, because you don't really know what's driving the stock prices. Is this just some kind of FOMO investing, or is this some kind of manipulation? Whatever it is, if you don't really know what's happening with the company itself, don't invest in that stock, okay? The second strategy for picking the right stock is to invest in a combination of growth, value, and dividend stocks, okay? So growth stocks are typically tech stocks, which are maybe mid cap, typically mid to even large cap for the most part, but they're focused on growth. They're not really paying dividends to you. They may not have been around for decades, like other value stocks like Disney, for example, or 3M and all these companies. So these are companies that are kind of at the forefront of innovation, about disruption. They're changing different trends out there, as opposed to going by the course like value or dividend stocks do, okay? So if you're just getting started and you're looking for that high end of 15 to 20% returns, a big portion of your portfolio should actually be in growth stocks, okay? Now, value and dividend stocks are mainly for stability and income. So for example, Disney is a classic example. They've been around for ages. They're here going to stay. They have that brand to them. They pay a pretty good dividend. I think they don't pay right now because of the pandemic, but eventually they're going to pay a dividend again. So those are value companies that they also pay a dividend. For example, you have Coca-Cola, you have Pepsi, you have 3M, Johnson & Johnson. These are all classic value and dividend based companies that add a little more stability and income to your portfolio. Okay. Now, for growth stocks, like I was saying earlier, you want to invest in innovative and disruptive companies that are at the forefront of future trends. Okay, this is going to be really important, guys. That's exactly how I pick stocks. A lot of people, just invest blindly in just a high flying stock, but you need to understand why that stock is high flying. What kind of innovations are they making? What trends are they disrupting that's leading them to be hyper growth stocks? Okay, so some examples that I have here are artificial intelligence, you have cloud and edge computing, cybersecurity, SaaS is software as a service, e-commerce, electric or hydrogen vehicles, or any kind of non-gas related vehicles, remote working, you have space travel, transportation could be robo-taxis or like the Boring Company that Elon Musk is doing, and you have healthcare. There are so many things under healthcare. Okay, so based on these different categories, I have some of my highest conviction stocks that I have here. I'm not invested in every single one of them, but I do have about maybe 80% of them in my portfolio. Okay, so for artificial intelligence, you have NVIDIA and Cerence. Cerence is a pure play AI stock. They work with automotive vehicles to create automotive driving systems using artificial intelligence. NVIDIA, I'm sure you already know, but NVIDIA, they're one of the pure play artificial intelligence stocks. They're starting to make more and more revenue with data centers and gaming chips. They're here to stay, and I truly believe that NVIDIA could become a $1 trillion stock over the next maybe 5 to 10 years. Okay. Then in cloud and edge computing, you obviously have Microsoft, which is a big player in cloud. You have Amazon because of their Amazon Web Services. And then you have Fastly. You guys all know Fastly. TikTok is one of their biggest customers, and they have pretty much 10x in the pretty much this year itself. And Cloudflare also is a cloud computing stock. Then you have cybersecurity. With cybersecurity, you have Zscaler and CrowdStrike. Both of them are used at my company themselves. That's one other way where you know that a company or a particular stock or a company behind it is doing really well is when you really see it around in your own life as well. So Zscaler and CrowdStrike are doing really well in the cybersecurity forefront. You also have companies like Booz Allen Hamilton, which do a lot of government contracts in cybersecurity. So they are something that you could put on your watch list as well. And again, as software as a service, there are so many companies, but I just mentioned a few here. Salesforce is one of the initial SaaS companies that are doing exceptionally well. Then you have Snowflake, which is a recent IPO. I think they're overvalued at this point, but I think in terms of the future, they still have a long way to go. And again, Zscaler and CrowdStrike also do come as SaaS companies or software as a service companies. Then you finally have e-commerce. In e-commerce, again, Amazon is the biggest player. Then you have Shopify, BigCommerce, Etsy, and Avalara. These are more up-and-coming companies, but I think they have a long, long way to go in e-commerce, okay? In electric and hydrogen vehicles, you have Tesla, NIO, and Workhorse. Tesla, I'm a huge bull on it. It's the largest position in my portfolio, so definitely bullish on it for the long term. For remote working, Zoom has been absolutely killing it. Even Fiverr 6x'd in the last year or so, and Upwork is still coming up. I think it's still undervalued at this point considering how well Fiverr is doing, so Upwork has a lot of potential. Then with space travel, you have Virgin Galactic. That's the only pure play space travel stock that's available right now, so that's exactly why I am invested in Virgin Galactic. But if SpaceX or even Blue Origin IPO at some point in the future, those are definitely going to be stocks that I'm investing in, okay? Again, with transportation, you have Virgin Galactic for hypersonic travel. That's potentially going to take another decade or more, but that's something I'm very excited about, okay? And if the robo-taxi system does become a reality for the next 5 years, I'm sure Tesla is going to be a huge front runner for robo-taxis, okay? Then with healthcare, you have Teladoc. Teladoc is the only telehealth company out there, especially with the pandemic. Teladoc has been doing really, really well because more and more people are understanding the benefit of telehealth and not having to leave your house for a simple checkup, okay? Now, Livongo Livongo uses artificial intelligence for monitoring insulin for diabetes patients. Now, Teladoc and Livongo are actually considering merging, so you could buy either of them, but eventually both of them are going to trade under Teladoc once they merge, okay? Then you have InMode, Shockwave Medical, and Dexcom. A lot of them are diabetes-based stocks that I think are going to benefit a lot in the future, okay? Now, step 2 is once you've picked the right stocks and you start building up your portfolio, I think it's going to be really important or beneficial for you to learn how to trade options, okay? even if you limit your options trading to just 10 to 20% of your portfolio, that's all you need to be able to boost your returns to 20% per year. Okay, let me give a quick example. So as you can see here, the solar ETF 10 has been one of the most profitable ETFs this year, especially because of a shift to renewable sources of energy. All solar stocks have been absolutely killing it, and this ETF alone has gone up 159%. Okay, so even if you just own this ETF in your portfolio, you would have benefited quite a bit. But as you can see here, I just have a couple of call options on it, and they're up a crazy 1,300%. Okay, now I've already sold out nearly 7K in just 10 options. Okay, so this is the last remaining calls that I'm still holding on, and just a few calls that have shot up like this is all you need to be able to shoot your annual returns to 20% plus. Okay, I have several such examples with other options trades as well, but I just want to give you that one quick example to show you how achieving 20% per year is not as unrealistic as you might have been told, or as you might have believed before. Okay, now when it comes to trading options as well, I want you to put in the time and effort to really learn the various option strategies, and also most importantly, I want you to know how to manage your risk on any potential losing trades. Okay, because you could just as easily make 100-200% return on one call, and you could then lose your next two trades, and before you know it, you're just balancing each other out. Okay, so make sure you're tracking your options trades to really see if you're making a profit or not. It can be easy to get sidetracked when you make one or two great calls and then you're losing money on the others. So make sure you're tracking it. Make sure you understand how to manage your risk. Maybe set up stop losses if you don't have much of a risk tolerance, and then understand that there are several strategies in different scenarios that you can take advantage of. Okay, you can watch my channel. I have a lot of videos on every possible option strategy out there. Okay, now the third step is to sell covered calls. Okay, so this does come under trading options, but the reason I want to put it as a separate step is because covered calls are a really powerful tool that can help you make a lot of monthly income on top of your dividends. Okay, so as I mentioned here, as you build up a large portfolio of stocks, you can start selling covered calls against your shares to sell monthly income. Okay, so right now you need at least 100 shares of a stock to be able to sell covered calls. And so right now in my portfolio, I have 100 shares of, say, Pinterest, Snapchat, Virgin Galactic, and another company called Magnite. And just these four stocks let me make over $600 a month just by selling covered calls. Okay, now at this point that might sound really less, but as you build up more and more hundreds of shares of several stocks, say once your portfolio reaches 200K, 400K, 600K and above, that can just covered calls can contribute 2 to 3K or even 5K per month, depending on the kind of stocks that you have and at what point you're selling the covered call. Okay, so make sure you learn how to sell covered calls, learn how to adjust your covered call to avoid getting assigned on your shares, and be sure you're actually reinvesting all this income from covered calls and dividends until you're making enough to cover every debt or bill payment that you might have. Okay, the reason I say this is because once you get to this stage, job security is not going to be something you worry about anymore, because you have income from covered calls and dividends to completely pay any bill that you might have. You probably have enough to pay off any kind of a debt you potentially have, be it a car or your mortgage payment or whatever it might be. And that's the point where you have to keep reinvesting, and that once you're at that point where it can pay all your bills, you could potentially start withdrawing part of that income from covered calls to build up your income. Okay, and finally, with step 4, it's really important that you diversify your assets, because once you do this for the next 10 to 15 years, you're probably getting to that 800 to 100K range, depending on where you're at with your investments. So it's going to be really important that you start diversifying your assets. Okay, so you can start using those covered calls and dividend income to invest that into real estate to pay down your mortgage. If you have a business, start investing it into your business. Or if you do have a job that you want to get out of to start a business, you can start using this monthly income to replace all your bills and then start your own business. Okay, so even if you reach $1 million in your portfolio, it's going to be important that you have ongoing liquid income through either a job, if you love your job, through your own business, or maybe start having rental income from the real estate that you start investing in. Okay, because just because you have $1 million, it's still going to be important to have liquid cash. Okay, you don't want to have to sell your shares every time you want to have to pay bills. So it's important that you still have some kind of an ongoing income that's going to pay you monthly or weekly or whatever it is. Okay, Again, as you get closer to retirement, you need to start limiting your options trades and stick to only covered calls, okay? Because covered calls are the least risk option strategy out there. The worst case scenario with covered calls is you get assigned to sell your shares at that higher strike price, which lets you sell at a profit anyway, okay? So it's a very less limited risk option strategy, and there's no need for you to risk a big portion of your wealth in some kind of a risky option trade, hoping to make $5 million in the next 3 months, and you just lose 500K or $1 million or something insane like that. Okay, so that's what you need to do closer to retirement. So take all this depending on what stage of life you're at, guys. I think this is my ultimate strategy, 4-step strategy that I am planning to use to get to that coveted $1 million range in the stock market. I think anyone can do this. It's not unrealistic at all. Learn the different strategies that are out there to be able to put them all together and really build up your wealth. Okay, it's really going to be important that you adjust your risk along the way and then eventually diversify your assets once you're at the 1 million mark. Okay, so I hope you guys found that really helpful, guys. This has been something very exciting that I wanted to share with everyone. I hope it adds a lot of value to you. If it did, please to smash that like button, leave a comment below if you have any questions or thoughts that you want to share. If you want to add to anything in this video, that'd be great as well. Just a quick reminder about the Discord group as well in the pinned comment and description, where I send live trade alerts. Be sure to join that, guys, and subscribe if you haven't already and hit the notification bell. Okay, thanks again for watching, and until next time.